Futures trading involves substantial risk of loss and may not be suitable for all investors.
Hi, everybody. Welcome back to Markets on the Move. I'm Marlin Bohling with you. Happy Monday to you. And Oliver Sloup is with us. He's with Blue Line Futures. Oliver, that was a wild, chaotic day to open up the trading week here. All kinds of stuff going on, whether it was grain, livestock, precious metals, all the outside markets. So much stuff going on. I'm just going to throw the ball to your court and see what really caught your attention today. There seemed to be plenty of it.
Yeah, there was a lot going on, as you had mentioned. The precious metal markets, continuing to move up into the right, big moves higher overnight. Silver trading to the highest level since 2011. Gold making new highs for the move. We had cattle, feeder cattle pressing limit up, live cattle following suit. We'll get into that in a little bit, but I think I kind of want to focus on the grain markets here to kick things off. Last week, we had a pretty constructive start to the week and then kind of failed and fizzled out in the back half of the week, and I think some of that technical weakness carried over into weakness to start this week's trade, and we saw some technical breakdowns, specifically in the soybeans. We'll touch on that here shortly, but corn is what we've got pulled up here. This is the December contract, and we are skating on really thin ice. We've got, as you can see here, some trend line support from those contract lows, and that purple line, the 20-day moving average, we've kind of defined this as a must-hold pocket to keep the bulls kind of in control, or at least some sort of technical advantage in the near term. If that gives way, I wouldn't be surprised to see maybe a little bit more selling pressure come into the market, take us back down near that psychologically significant $4 level, and from there maybe see more of a consolidation trade as we kind of chew our way through harvest. Now, if we pop over to the soybean market, a different picture as far as the technical landscape goes. You and I talked about it really over the last couple of weeks, testing and holding this cluster of major moving averages. You can see here the red line, 50-day, the yellow line, the 200-day, and the blue line, the 100-day. That was acting as a pretty significant support pocket over the last couple of weeks, and we obviously broke and closed below that today, which really opens the door for further technical pressure. Fundamentally, I think there's probably some harvest pressure coming in, and then we got some news over the weekend with regards to Argentina export tax being paused. That maybe prompts a little bit more producer selling down there. And then I think just the absence of China continues to weigh very heavy on the market. Nothing really came of the conversation between Trump and Xi last week, and that kind of takes some wind out of the sails, so to speak. And then we have China on holiday next week. So a lot of bearish headwinds for the soybean market to start this week. These markets do respond really quickly, though. So how much did they price in right away? I guess we'll find out in the next couple of days.
Well, it sounds like if Argentina does away with their export tax, and I believe it's until they accumulate like $7 billion worth or something like that, they want to try and gather up some U.S. dollar currency, I guess. That would give China the chance to kind of top off their needs without having to come to us then, right?
That would be correct, and that is the big concern, because this is kind of go time when you're talking about U.S. exports to China and U.S. exports in general. We really want to see these shipments pick up here in the next couple of weeks. If we don't, again, I think you could start to see additional pressure come into the market. Now, does that demand just completely disappear? Not necessarily. A lot of it's just displacement, but nonetheless, it is a big headwind for the soybean market.
Somebody contacted me this morning and said that in some parts of the central U.S., the basis is really falling apart, the cash basis at the grain elevators. Are you hearing the same thing?
Well, as harvest starts or continues to ramp up, you're starting to see some of that pressure come into the market, and I think that's part of the reason why we've seen some weakness to start this week's trade. Corn, I think, could probably hold its own. Again, near $4, $4.20. Hopefully we can see that hold and get back towards $4.30, $4.35. What is going to be the catalyst to get us out above there is the big question. Soybeans, big concern here, obviously, with the lack of China and harvest coming around the corner. The supply side, and then weak demand, potentially that weighs heavy on prices. So it'll be interesting to see, how much this market is priced in right now. Seasonally, corn can carve out a low. Seasonally, soybeans tend to see softer trade through the rest of the month, so it'll be interesting to see how that plays out. And then we haven't touched on wheat, which maybe we should just gloss over. It has been just a constant wheel of disappointment. It looked like we were going to get a move back higher last week, 4 consecutive higher closes last week, the longest winning streak since last December. We gave that all back and then some. 4 consecutive down days, a new contract lows in today's trade. So our optimism has been muted, certainly. Big technical breakdown today. Where is the bottom from here? Looking at these charts, we often look at charts as kind of a technical roadmap between previous interactions of buyers and sellers, and at new contract lows, you really don't have that previous interaction. So looking at the chart, you just go with the round number, psychologically significant $5 level, and see if that can hold. I think the September contract, before it went off the board, I think posted a low near 496, so potentially that offers some support to the market. Export inspections, they were strong today, above the top end of expectations, which was good to see, but man, this chart just looks ugly as sin.
You always offered up a famous quote that's related to following the trend in the markets, and it seems like that would really apply here in the wheat right now.
The trend is your friend until the end when it bends, and it looked like it was starting to bend last week, but like I said, the last 4 days, they've kind of given it all back and then some, so it'll be interesting to see where the dust settles in the next couple weeks. I think sometime sooner probably rather than later we could probably fish out a little bit of a low. Global ending stocks continue to just be weighing very, very heavy on the market, so it does keep the upside rallies somewhat limited, and that's for sure.
I heard in the high plains there are cases where cash wheat at the local elevators, the spread is so wide that it's barely $4 a bushel now.
Yeah, like I said, there's a lot of wheat out there, and a lot to chew through, and I think the prices are certainly reflecting that. Hopefully, we can move past that, maybe entice some sort of demand and see that demand continue to pick up. The export sales, export inspections have been strong recently, so hopefully we can continue to see that, offer some sort of a silver lining for things to come. But like I said, a lot of weakness on the chart, and that's tough to ignore when you got weakness in the soybean market like we had today. It's tough to kind of put that to the wayside as well when you're talking about corn and wheat.
Argentina seemed to grab the headlines in the grains. On the livestock, it seemed to be Mexico that was gathering all the headlines. What's up?
We had a cattle on feed report on Friday that was mostly neutral, and then we got some news yesterday evening, Sunday night, with regards to the screwworm being spotted 70 miles south of the border, which is, for all intents and purposes, basically here. And nonetheless, you got the cattle market just ripping to the upside today. We do have expanded limits in tomorrow's trade, which I believe is $13.75 for feeder cattle and $10.75 for live cattle. So something to keep in mind there if you're trading those futures contracts. Looking at the options market, I think we're pricing in about $1.50 higher when we were locked limit. So it'll be interesting to see if we do get some follow through. But the cash trade will be interesting to see. I was talking with guys all across the Southern Plains down in Texas. They don't know that cash is going to be anything phenomenal here this week, so it'll be interesting to see if we do get some follow through. Technically, you can clearly see that we didn't have a breakout today. That purple line, the 20-day moving average, had been acting as resistance. That was also an old breakdown point. So we got back out above there, puts the bulls back in the driver's seat, and the same for feeder cattle. We'll hop over here to the November contract, got out above that 20-day again, and that breakdown point. That really keeps the door open for a potential retest of those contract highs. Whether or not cash is going to be able to get us there is the million-dollar question, though. And then, I know I'm probably talking in circles, but the USDA did say that they would be having some more statements with regards to screwworm and replenishing the cattle herd here in the near future, so keep your eyes peeled for that.
Well, if you have expanded limits tomorrow, would that put a new contract high in play, or can they get there?
Yeah, I mean, that would put us right here at 360 up to 3. Yeah, I mean, that would put us back in uncharted territory. So nothing's out of the question at this point. I will say the last couple times we've had the expanded limits, the market actually reversed. The last couple times have been limit down, and then we were higher the next day. So Most markets you see follow through when you're locked limit. Cattle complex, that is a different animal. So tomorrow should be an interesting day for sure.
So what if, like you said, the New World screwworm is basically on the border right now? What if it does get discovered in Texas? What do you think that would do to the market?
Well, I think it would be a bearish reaction. Potentially, you're seeing buying coming in ahead of that, saying, hey, we need to buy now in case it does get here, and then we probably won't have much demand. I think that probably tempers a lot of demand just from the headline perspective as well from the consumer. So we have gotten some false headlines over the last several months of potential screwworm sightings and findings here within the states, and we did see that pressure the market. So that would be my instinct. But again, this cattle market is certainly a different animal in this environment. Very, very wide swings, very, very wide ranges. We're seeing the average daily range in feeder cattle at about $6.50, and for live cattle, $4.50. So it's going to be volatile one way or the other, that's for sure.
So what was going on with the precious metals here to open up the week? Is that related to the Fed announcement or what?
I think some follow through with the Fed announcement. Central banks continue to be big buyers of gold and silver, and that kind of really underpins the support in that market. And really, if you're a longer term gold bull or gold bug, whatever you want to call it, that's really what you want to see. I would probably anticipate some sort of healthy correction at some point. From what level is going to be the big question, but this is, does remind me a lot of what we saw back in 2011, where you see these markets just start to go parabolic, and you say, surely that thing is overbought, and it just keeps going. Back in 2011, we saw silver overbought for, I think it was several weeks at a time, and eventually that led to $5 daily trading ranges when it finally did see a blow off top. So up a buck plus in a day. Looking back at historical price action, it doesn't really seem like we're quite there yet. Again, if we do get that healthy correction, I think that's going to be a spot for central banks to step back in and ramp up their purchases. So I would expect that trend of buying to continue. Central banks aren't going to be ones to be trading in and out of it like you or I or a lot of our clients. They're in the long term for buy and hold here.
So are you looking for a turnaround Tuesday or not?
And the precious metals, man, I would love a good pullback to add some exposure, but I don't know. A lot of it's going to probably depend on the dollar. A lot of weakness in that market today. If we can get a relief rally in the dollar, I think that would probably shake the trees in a lot of commodities and present some pretty good opportunities here as we look to turn the page over into the fourth quarter, which is kind of crazy to think about. We're almost there.
Boy, isn't that the truth? Yeah. So if our viewers and listeners out there want to get in touch with you, how would they do that?
Head over to bluelinefutures.com. We've got a suite of information. We cover a lot of different markets, agricultural markets, precious metals, energies, etc. You can reach out to us directly, 312-278-0500, or you can sign up for a free trial of our daily commodity commentary on bluelinefutures.com and select the markets that you want. That'll be delivered to your inbox each and every day.
Well, good stuff. Thank you for talking with us today. I appreciate that. We'll catch up with you again at midweek. Oliver Sloup of Blue Line Futures with us. We'll catch you next time on Markets on the Move.